Can an IRA invest in private equity? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. The IRS doesn't say what you can invest in, only what you cannot invest in. Hence, if you want to invest in a private equity fund, and what is a private equity fund? Essentially, it's an investment fund that's managed by investment professionals that invest in businesses, generally private businesses, although some of the businesses could also be publicly traded. And the idea with private equity is there is risk because these investments are generally illiquid, meaning they have to be locked up for at least 5 years, and they're investing in private businesses, which isn't as marketable as a publicly traded security like Apple. Can't just sell it whenever you want. However, there is huge upside. We all remember what happened in the last couple of years where valuations exploded of private businesses pre-IPO. Businesses went from $1 billion valuation to $30 billion valuation at IPO. That is one of the advantages of investing in a private equity fund. You get to really tap in to potential growth. So using a self-directed IRA to invest in private equity has major advantages. The ability to get in at an early stage of potential huge gains in a private business investment. There's also risk, lack of marketability, lockup period, and not all private equity investments work out. Now, from a tax standpoint, generally all your income and gains from a private equity IRA investment is tax deferred or tax-free in the Roth. However, two things to be aware of. If the private equity fund, the partnership, invests in portfolio companies underneath it that are pass-through, like an LLC, there is a tax called UBIT, unrelated business income tax, that could potentially apply on the net income that flows through to the IRA. And the tax can go as high as 37%. That's only on the net business income allocated to the IRA from a portfolio company that's a pass-through. If the portfolio company is a corp, C corp, then there's no UBIT. Same way, if the private equity firm invests in a pass-through business with leverage, they use loan to buy into the business, that could also trigger UBIT. Therefore, if you're using an IRA to invest in a private equity fund and the portfolio companies are pass-through entities, be cautious of UBIT, ask the promoter about UBIT, and at that point, you'll have to determine whether the investment makes tax sense.